Hi guys, welcome back. So now is the time. As promised, we are here with our finance tutorial. Yes, finance is a very huge topic, but don't worry. We will try to break it down into small pieces and understand it step by step. So, what are we going to cover today? Well, today, basics of finance, financial hierarchy, financial system tools, and their roles. Okay, let's start. When we say finance, there are many questions that comes into the mind. So let's cover that first. The first question is what? What is management? Well, it's management of money or any material source. The second question is why? Why financial management is important? Simple answer is because of its unpredictability. And the obvious answer is because we have limited resources and we want the best out of it, right? Just imagine I have something called X and you have something called Y and we want to exchange it. So before exchanging, what do? We assign some value to each one. Bit complicated, right? Now consider millions of such exchanges. Complexity increased and that way currency came into the picture. So to manage this currency, we need some tools and each tool have specific roles. So let's understand that first. Well, financial system. It can be divided into two parts for a simplicity. First is formal and another one is informal. Well, as name suggests, formal is the organization which is recorded and systematic. So let's understand that. That can be further understood in two parts. One is financial institutes and another one is financial market. Financial institutes cover banking sector. Yes. This sector is particularly for credit transactions, cash management and so on, which is organized as commercial bank like private, public, foreign and cooperative banks. The another one is non-banking sector. This sector generally covers life insurance corporation, mutual fund institutes, NBFCs, and so on. But along with all these things, we have another part which is called regulatory institutions. As name suggests, it is a regulatory institute for other banking and non-banking sectors, like SEBI for stock market, RBI for banks, IRDA for insurance companies, PFRDA for pension funds, and etc. Now, this too can be understood as another term also, like intermediary, who lends and borrow money, like banks, right? And non-intermediary, who lend money but have some separate source of money, like LIC. Okay, now we understood this. Let's move on to the financial markets. Again, it can be understood in two parts. First one is money market and capital market. Money market is for short transactions and capital market is for long term transactions. Another another way is as primary and secondary. Yes. Primary is for something new securities, new ways. And secondary is for existing securities. So now basics are ready. So what you should expect from this? Well, we will go step by step into stock market and fundamental of investment, insurance and their parameters, financial development and trends, behavioral economics, and so on. So, if you want any other topic to be covered, please let us know in the comment section. Also, please tell us how did you find this video. Thank you.